on, future me? Hope I'm coming through well. I'm on the road, so I don't have my usual setup, but no excuse. Want to obviously put together my pre-market plan for this coming week, as I do with every coming week. And so just to jump straight into it, we do have the dollar, the daily for the DXY pulled up on the chart, and so I do want to highlight, right? We did have CPI come out last week. It came in pretty soft, honestly. We had a 5% print about 2 months back. This month we have the 4.9% print, which isn't much of a change. I do want to highlight as well the fact that the Fed is mentioning that or rather, in their last rate hike, in their last press conference around their rate hike, they did omit all verbiage around, and I've mentioned this in the past, they've omitted all verbiage around further rate hikes, signaling to a potential pause. But personally, with the way that CPI numbers came in, I wouldn't, I wouldn't suspect the Fed to pause or to start cutting rates. Interesting sort of little factoid, just doing, a bit of research and everything else. There has never been a time in history where inflation has been at 5% and on track to get back down to 2% without a recession. And on top of that, there has never been a situation where that's been possible without the Fed fund rate being higher than inflation, which it currently is. I believe it's like 5.25, if I'm not mistaken. And so, as far as just looking at it from that perspective, it does seem that a recession is on the way. And that might, play a factor in the Fed's decision to pause or cut rates. But personally, just the way that I'm, from my perspective, the way that I'm interpreting this entire narrative, it would be ridiculous to pause or cut rates, although it would, it would put a lot of strain on the economy and everything else. So, with that being said, right, a lot of that narrative and a lot of the news around the softer CPI numbers, as we can see, have resulted in a very large move for DXY. I feel like I mentioned this in previous pre-market plans as well. This 102, or rather this 101.25, this 101.50 sort of area has been hanging on by a thread, has not wanted to break, and obviously we're now seeing the break of this channel to the upside, clear momentum above the 102 sort of 50 level of structure, and now we're just making a move back into 103. A lot of people out there are mentioning the move into 105. Obviously, we do have a couple of different barriers and roadblocks prior to getting there, but it does look like, obviously with the momentum that we closed this last daily candle on, that could be a very big possibility. As we can see, looking left, we could also call it sort of like a double bottom as well. Where are my tools? On the laptop here as well, so let me grab this and come back here. So we do have a little kind of double bottom going on here as well that we can highlight. Oh, that's nasty. Let's bring it right here. Boom. And so with that, excuse me. And so with that, obviously we do have the 105, the 105.50 sort of area acting as a neckline. We also have a couple different confluences that will act as even stronger sort of points of resistance. Obviously we have this liquidity level, this sort of SR zone, looking left. Okay, excuse me. So looking left, we do have this liquidity zone, this level acting as resistance. And so with that, we do have it in confluence with the 786. So it does, again, it's a well-respected level of resistance. We've rejected this level and acted as support here time and time again, looking back. And so looking at it from just a structural perspective, right, that is the most likely next area for us to come into. Prior to, we do have one particular area at 103 sort of 50 area, and looking at it on the weekly becomes a ton more clear. Look at the momentum on this most recent weekly candle. This is a very reminiscent of the push that we saw back here into 105 sort of area. So once again, I don't want to rule out the fact that 105 is in the cards, but we do have to break other areas and levels of structure prior to getting there. Obviously, again, 103 and 103.50 being two of the most important. Reclaims of 103 are temporarily bullish into 105. So again, as far as I'm concerned, we either get this, right? We either get the move into 103 and move lower, which with the amount of momentum that we're seeing might be unlikely, or we get the reclaim of 103 and the clearly defined move into 105, 105.50 sort of area. before we see any sort of downside. And so with that, right, it all kind of ties in well together, especially with the sort of narrative that we're hearing from the Fed around the potential pauses. A lot of banks like Goldman Sachs and other really big banks are betting against a pause, obviously leaning towards further rate hikes in the future. So I just want to highlight that there as well. But regardless, even when we see, and we see this time and time again across the market, when we see big pushes, or rather big moves to the downside or the upside, those moves have to be retraced. So it wouldn't surprise me in the least bit to see the reclaim of 103 into 105. Once again, I am of the sentiment that, with the way that we're seeing rate hikes and everything else, I'm of the sentiment that we remain bearish on the dollar. But with these local levels being reclaimed, I can't ignore the fact that, if we reclaim 103, we're more than likely making the move into 105. So again, one of two scenarios: either we make the move into 103, 103.50, see the rejection and further downside, or the other side of that, we get the reclaim of 103, make the move into 105. And especially with the way that gold is looking, gold is at a pretty pivotal level, a very big level of support. And so seeing clearly defined weakness or strength at these particular levels is going to be a very big determining factor around whether or not I'm getting long on gold, because as we know, I've been a gold bull for the longest. We look at this in the monthly here as well. Nothing super definitive as far as I'm concerned. I mean, we could fib this out here as well, right? Like, we could take this swing high to swing low. We're at the 50. Like, I wouldn't really consider this too much. I would still like to see the move into 100. But obviously, if we see a retrace beforehand, I would like to observe that prior. Once again, I'm of the sentiment that the reclaim of 103 is temporarily bullish into 105. 105 is honestly the bouncer break level overall for the dollar. If we break 105 and continue higher, it's over. And so once again, I'm wanting to see either a rejection or a reclaim of 103. Obviously, the rejection brings us back into the 100s. Other side of that, we go straight into 105. And so that, I hope that made sense. And so that brings me into JPYBasket. Let's start on the daily. So, pretty similar tune that we've been seeing these last couple of weeks for the yen. We've obviously seen clearly defined weakness. I can actually adjust this channel here as well. Not necessarily a channel break just yet, because we have these wicks that we're kind of clinging on to here as well. But overall, right, I am of the same sentiment that we're going to remain bearish on the yen, obviously with the way the chart is looking, and then on top of the monetary policy statement that was released last month for the Bank of Japan. Their entire narrative is that, of course, they benefit from a weak yen. On top of that, they're going to keep their rates negative as far as their interest rates are concerned. They'll also be printing money and doing, as they say, the necessary amounts of quantitative easing to buy into REITs and other investments like the Japanese bond and everything else. And as a result, as I've mentioned hundreds of times, they are sacrificing their currency. So it's only right that we would see further downside for the yen, and that's what I'm expecting. Obviously, if we start to see stability above this sort of 77.60 sort of area, the move into 8,000 is still in the cards. But until we flip 8,000 and move higher, we're still bearish, right? Structurally speaking, we do have this channel here that could break, but once again, we would be breaking straight into 8,000. And if we reclaim 8,000, I would probably start changing my tune. And so with that, we can look at the weekly here as well. We did see a very clean rejection of the range low here at 7,500 sort of area, and we're playing back into the range mid at 8,000, sort of 7,950 area. But it is a weak sort of candle. We could call this sort of a morning star sort of reversal back into 8,000 here as well. But I would want to look more towards the daily for added context around the move into 8,000 if that's where we're going to be heading. We could also fib this out. I believe this is the local 618 on the weekly. So that's definitely something to take note of. Yep. Absolutely. So with that in mind, right, obviously, again, 8,000 being the next sort of level of structure. If we do find strength at the, not intraday, but the smaller sort of levels of structure that we're seeing here on the daily, primarily being 77.50 area. If we continue to break this channel, would not be surprised to see the 8,000 move. But again, I would be expecting a rejection of 8,000 since it's been acting as such a strong level of support and resistance. as we can see looking left and just in the past in general. And so that leads me into the pound, right? We've actually, oh, excuse me. We actually saw a big rejection on the pound. Every time the Bank of England raises rates, we generally see this big move to the downside, especially after Governor Bailey, does his whole speech and everything else. We generally see the breakdown for the pound. Now, I know that we've seen this sort of pattern, this sort of yeah, we call it a pattern. We've seen this sort of thing play out many times where we have this very fickle trend line. We start to squeeze, right? Squeeze into a very big level of resistance. And either we see the breakout of the ascending triangle or we see the opposite, right? We see the breakdown. And we're seeing the latter, right? We're making a move with momentum back into the 124 area of support. And as far as local levels are concerned, this is going to be a sort of bouncer break level for me, just because once again, looking left, we've used this level as both support and resistance. So to reclaim that level and move lower, 122 would be programmed in many respects. And then outside of that, 119, 120 sort of area would be coming thereafter. In the perfect world, I would love to see us make this move into 124 area and start to build a base, start to wick as we've seen looking left here. We'd love to see us build a base on 124 and make a move higher back into the 126s and potentially break that area. But when I look at this on the weekly, right, does not look like we're going to be seeing that anytime soon. As we've seen, and as I've mentioned in the past, this is a big level of resistance at 126, also in confluence with the 618. So it's definitely not a good sign to be seeing such a big engulfing candle on the most recent weekly candle close, like we're seeing here. And so obviously we have the daily levels to take into consideration, but when we see a rejection like this, right, the most likely or the next level of structure outside of where we're at right now at 124 is the 120s that I just mentioned on the daily. We can take a look at that once more here as well. Once again, if we cannot build a base on 124 and make that move higher and back into 126 and potentially higher than that, obviously I would expect the 122 bounce. If we don't see that, 120, 119 is programmed. And as far as what we're seeing, once again, with the yen potentially trying to retrace back into 8,000 and the downside that we're seeing on the pound here as well, as long as those two indexes remain decoupled, I'm over the moon, right? But it's when these two indexes and currencies start to move in the same direction is when we have a little bit of cause for concern, just because once again, if they're moving in the same direction, generally GJ will be a little bit choppy overall. But when we see these two indexes, or rather these currency pairs, these currency indexes decouple, they move in different directions, they start trending. And they just make for much more clean moves overall. And so that's what I'll be looking for. Once again, I need to see stability at 124 for the pound. Otherwise, again, 122 is programmed, and then 120 thereafter. As far as the yen is concerned, obviously we are still within this descending channel, so I would expect further downside. But if we are going to retrace like the sort of weekly is hinting at, I would expect that 8,000 retracement and then a rejection thereafter. I wouldn't be expecting a reclaim of that level. Obviously, I don't have a crystal ball, but I would just need to see where we're at when we get there. And so that pretty much sums it for the indexes. Let's go ahead and get into the pairs that I'll be trading for the week. And we can go ahead and start with GJ. Very interesting week for GJ. Let me pull this up here 1 second. Okay. Very interesting week for GJ. We ended the week off, right? I believe we opened right here. Okay, awesome. So we ended the week off right at support, right? Looking left. We're still making higher highs and higher lows, but there's something that I do want to highlight, right? Looking left, this is a very well-respected level of structure. We've used this as both resistance, and we're trying right now to form this level, use this level as support moving forward. Excuse me. One little problem though, right? As we can see, and I do this all the time on the daily chart, as we know in my previous pre-market plans and everything else. We have a higher high and higher low sort of structure forming. Obviously, we have this low, we have a high, we have a higher low. We have a higher high, we can call this here as well, higher low, another higher high, higher low. We are failing to form another higher high. We went back up. Obviously, we used this level at 168, the June high, as support, and we had a pretty big bounce to end the week off. Not this last week, but the one prior. But we failed, right? This is the thing. We failed to reclaim this level at 171. And looking left, this is a well-respected level of resistance, as we now know. We had the pretty big rejection back here. We had another one, a couple weeks back here as well. On the higher high, again, we formed a higher low. The next step thereafter is to form a higher high. Since we failed to do so, I'm of the sentiment that if we break the June high, 168 sort of area, this level of what is now supposed to be support, if we break that level, very similar to what I mentioned at 166, failure to create stability at this level equals a shift in market structure, which would mean a move into 166 and potentially lower than that. And so this could potentially be, again, a lower low and lower high sort of structure starting to form. We could range between 168 and 170 for a couple of days before we make that move definitively. And it wouldn't surprise me, especially with the way both the yen and the pound are looking at the moment. Again, as I mentioned, I am expecting further downside for the yen, and especially with the way that we're seeing the pound free fall after the Bank of England's rate hike, I would not be surprised to see, again, those two currency indexes to start moving in the same direction, at least temporarily, while they're still retracing, and working themselves out. And so with that in mind, once again, we have higher highs and higher lows. We have now broken that structure. We have failed to create a higher high within this last week. With the amount of momentum that we came into 171 with, to end the week off last week, I would have expected, awesome, we're going to make another move higher. False, right? We have done the exact opposite. We made what is now a low, and now we have a high. And now, we have to wait until we see a potential break. If we see that break, again, I don't have a crystal ball. We have to see a break of 168, personally, for me, to, again, start switching my tone around taking loans and everything else. If we do break 168, I would be open to taking shorts all day, every day. It's only in the event that we see stability above 168 and further stability moving forward into the coming weeks that I would want to continue taking loans. As we see with this arrow here, I would need the bounce. The bounce looks great, especially back here. The way we wicked into the zone, bounce looks amazing. The most recent daily candle close, although it's not exactly, what I want it to be, everything that I had hoped for, it is still a bullish candle, a small one at that, but until we break 168 definitively with strength, all the price action that I'm seeing here is just simply forming a base of support at 168. Once again, looking left, right? We've used this level as resistance many, many times, so to see us flip it this way, technically speaking, I would have nothing else to do but to interpret this as a bullish move. Until we break back below 168, I'm not going to be taking shorts. Only in the event, again, that I see the break of 168, the June high, will I be taking shorts. And so we can take a look at the 4 hour. 4 hour always becomes a ton clearer, And so very clean move. Very clean move this last week. Let's see, we're right here. So I did mention in my previous pre-market plan that I was wanting to see the June high retest or a reclaim, of the April 23 high, this sort of zone. I would want to see strength above the zone, break, retest, and higher if I was going to get into loans. Otherwise, I would wait for the June high. We saw basically the exact opposite, right? We saw a double top form, beautiful double top form at this level. And as I get into intraday levels, like the 1 hour and everything else, it becomes a ton clearer. Very clean neckline here as well. And just a clear break back into the June high. We also got the 168 retest on lower time frames on the 1 hour and everything else, which is what I was expecting to get long. And so into this coming week, once again, we do have a local swing high to swing low 618 here. Once again, as I mentioned on the daily, I would want to see structure remain bullish, meaning that I would need to see higher lows and higher highs. In this particular case, right, we're above the June high. Looking left, it's very reminiscent of this move that we've seen back here. I would love to see stability formed above the June high. Wicks, like we see back here, like we see, I mean, I guess that's the only example I have, right? Like, bigger wicks and bigger sort of engulfing candles above the June high to remain bullish and want to take longs. Otherwise, it's looking like we're getting a very small retracement before we reclaim levels below the June high and move lower than that. We also had the sort of double bottom neckline retest here as well, so that's definitely something I want to highlight. But personally for me, the 1 hour looks a ton clearer as far as determining where I want to position myself in the market. And I feel like we talk about this all the time, right? Very familiar sort of pattern that we're seeing forming here, right? We have a very fickle trend line, almost an ascending triangle that's sort of squeezing, right? We got a big move above the June high. We reclaimed it, which is amazing. Very strong stability above 168 as we see back here as well. So it is, again, making itself out to be a very well respected level of structure. As we see right here, we use this both as resistance and we have now turned it into support, making, again, 168 sort of the bouncer break level for me. As long as we're above 168, I'll be looking for longs overall. And so where does that leave me in the sort of bigger picture? Like, where are my areas of interest? Where would I need to be getting in, right? Again, with this sort of fickle trend line, either one of two things. Either we make the move into the December 22 high and move higher, right? We have this ascending triangle here. Amazing. We make the move higher, back into the 170s in this sort of range mid at 170.20. Or we see the squeeze, right? We see the squeeze into the December 22 high and reclaim levels below the June high. And things like this are great personally just because the market closes within sort of a range. Although it's like a microstructure sort of range, the December 22 high and the June high, it's still well defined. Because looking back, once again, I was wanting to, again, get long around the June high or 168. And as I mentioned, we use this sort of level at the December 22 high as a level of resistance before making a definitive move higher, right? All this price action was kind of like keeping like a beach ball underwater type of thing. Rejections, move down into 168, the reclaim of the June high, which is bullish, rejections of December 22 high, and only until we make a definitive move above the December 22 high do we see the sort of bigger move play out, right? Only then do we see price start to trend. And so I would be expecting the same exact thing here, right? Once again, we already have the reclaim. We have the retest of 168. We have the reclaim of the June high. All that would be left is to have clearly defined strength above the December 22 high for me to confirm that we're going to remain bullish, at least temporarily, into the last levels of resistance. I do want to highlight something as well. Last week we had a beautiful range break. As we can see right here, this is the weekly open. As I mentioned on the 4 hour, I was waiting for the April 23 high, the break and retest, to continue higher with loans. We saw the exact opposite, but we did get the range break to the downside, microstructure retest, and move lower. With that being said, we saw the double top play out. Typically, when we have patterns like this play out, there's always a neckline retest if there is going to be further downside, right? So very simple target here, right? From the December 22 high straight into the last week candle mid at 170.18 sort of area. So that's where I would be targeting. If anything higher than that, obviously we have the bigger level of resistance at the April 23 high and the November 22 high. And that's kind of how I'll be playing it once again. I would want to be seeing clearly defined strength, a break and retest of the December 22 high, or at least a candle with momentum above the December 22 high to get long into 170 and potentially higher than that. Otherwise, I would wait for rejections of the December 22 high, breakdowns of the June high, and it's only until we see a breakdown of 168 that I will be getting short overall. So I hope that makes sense. Pretty simple and straightforward. We do have a sort of a microstructural level of resistance here as well at 169.65. I don't want to consider it too much though, because once again I feel that the December 22 high in the grand scheme of things is the bigger level. Because even here, right, we saw price use the December 22 high as a temporary area of support prior to making the move down. So once again, just want to sum this for my future self and everyone watching. two scenarios. Either, again, we opened in this range between the June high and December 22 high. Either we continue to squeeze higher and have the ascending triangle play out into the December 22 high, hit the break, retest, and higher into 170s and potentially higher than that, or we squeeze into into the December 22 high, see the rejections, which would also kind of be a lower high in the 1 hour sort of structure. The June high reclaim and lower, and if we start to see reclaims below 168 with strength, I would then be getting short. Hope that made sense. Now let's move on to gold. Gold is actually pretty simple and straightforward this week. Let me see here. Let's get this pulled up. Hopefully this loads. Technical difficulties, but we have gold pulled up on the chart. So pretty simple and straightforward for me, at least when it comes to gold. As we're seeing, right, and I feel like I highlight this across every chart, especially with GJ, we have a very well-defined structure, right? We have higher highs and higher lows being formed. Obviously, we have a low here, high. We can call this kind of a higher low, or right here, kind of a higher low sort of thing. We have a higher high. We have a new higher low. Another higher high here when we touch the previous all-time highs, at least on spot. For whatever reason, the ON the chart does not have gold reaching 2077 just yet. But regardless, the next step for us would be forming another higher low at this particular point. And so that higher low would line up perfectly with what would be the level at 2000 here, as we can currently see, right? Very clean wick into those levels we've wicked prior, like last week sort of deal as well. We also have an ascending sort of channel, a trend line here formed, acting as another sort of piece of confluence, another sort of area of support, another area of structure overall. And so, again, that just leads me to believe that we should be forming another higher low sometime here shortly. Obviously, with the amount of strength that we're seeing on the dollar, we could see a breakdown at 2000, which for me becomes a ton clearer on the 4 hour, because this would be a bouncer break level for me personally. Let me get there we go. And so we can see that very well defined here, right? Obviously, looking left, we have a very clean rejection of the 2000 downside, and we saw a quick rally before having a further breakdown back into 2000 and retesting the level. But again, when we look left, when we have this big sort of consolidation range that I highlighted in my previous pre-market plan, once we broke out of that, we had clear traffic to the upside, right? So again, that just overall, and even looking left, right, we've used this level as resistance and now turning it into support. So all of these sort of different factors just strengthen my conviction in 2000 as a level overall. And so with that, it would be a bouncer break level for me. I'm wanting to see obviously clearly defined strength and stability above these levels. Obviously, I want to see wicks like this, wicks like this, looking back, I want wicks like this sort of deal. I want to see clear rejections to downside at the 2000s for me to get long. Obviously, if we break the 2000s, I would kind of, I would sit on the sidelines, kind of sit on my hands as well. Sort of next level down, we do have a very well-defined level of support that we use here at 1979 area. And as we can see, we were hanging on to this thing by a thread before eventually rocketing up into and reclaiming the 2000 level. And so I wouldn't be surprised if we saw something similar, like a play back into 1980 if we do find 2000. But overall, I am still of the same sentiment. I want to get long at 2000. I do not want to wait and play this big consolidation range at 1980 and start to bounce in between 1980 and 2000 all over again. I would much rather play the much cleaner range, which is levels above 2000. Obviously, if we continue to break down further below 1980 and we start to claim 1959, that is another well-defined level that I would consider. That is a range low between the range mid and high at 2000. So I would definitely consider loans at that level. But I do want to highlight that 1980 is a very well-respected level of structure. So reclaims below 1980, as much as I don't want to say, they are a bit bearish. But the real definitive sort of move would be below 1956, right? If we start to move and break below 1956, I would have to start changing my tone around my bullish bias, because even when we look at this thing on the weekly, right, it's not looking too hot. Let's go back. It's it's not looking too hot, right? We're again using the 1980s and kind of hanging on to it by a thread. But the most recent weekly candle closes is showing a lot of rejection to the upside. And we're at basically the all-time high, right? So you would expect a move back down. And so the next sort of, again, level of structure for me at least would be the 1935 and 1900s if we do start to reclaim below 1980 and 1956. So again, I mean, I would consider I would consider changing my tone below 1956 overall, and play that into the 1900s and everything else, as these arrows, very clearly define. But once again, if I am going to get long, it would have to be at 2000 or at 1956 with clearly defined strength back into those levels. Otherwise, I would be sitting on my hands. I would not be considering 1980 whatsoever. And then thereafter, like 1956 breakdowns, I would consider shorting that as well. Pretty simple and straightforward for me, at least. 1 hour always becomes a ton clearer. Let me let all my drawings pop up here. There we go. And so we do have a very well-defined channel, a descending channel here as well. And so I like to play these channel breaks. So if we do start to see, again, moving into this coming week, if we do start to see stability above 2000, I would want to see, price start to squeeze into the channel and reclaim, or rather break out of that particular level. And so I would consider, once again, longs at 2000, on well-defined stability and strength, much like we see back here, and everything else. And as we can see, below 2000, absolutely no traffic until 1980, right? So I would not want to play the breaks. Like I wouldn't take loans anywhere outside of 2000 as far as I'm concerned. Especially when we look at it from a 1 hour perspective, because if we do break down at 2000 and move lower, very clean range into 1980, even clearer range into 1959, because we haven't played at those price ranges for a very long time, a couple of weeks as it stands. And so just from a 1 hour perspective, much like I mentioned on the 4 hour and the daily, 2000 being a bounce or break level, on intraday time frames like the 1 hour, 1980 is a very big level as well. As we can see, very clearly defined stability and SR zone overall. We can even look further left. We've used this both as support and resistance in the past. And so I'll be treating it as such, as a very big level and a very definitive level to help point us in the right direction as far as where we should be positioning in the market. If we lose 1980, it's pretty much over. If we lose 2000, more local levels, it's pretty much over as well. So again, as far as my areas of interest, I would be open to taking loans on stability at 2000. I would play the channel break here as well. I would 100% all day, every day. If we start to reclaim 2000, or rather, we start to see stability above 2000 and claim this descending channel into 2015, I would take the break and retest of 2015 all day, every day. Otherwise, there aren't many areas of interest for me when it comes to taking loans. Other side of that, breaks below 1959 are bearish to me. I would consider potential bounces from 1959, but I wouldn't bet the house on them. I would honestly rather sit on my hands and see sort of where we fall at, if we break 1980. Because once again, 1980 is such a huge level. I would just want to see where price lands and see where I can position myself thereafter. And then even outside of that, 1959 is just such a big level as well. It was a previous bouncer break level. 1980 is a bouncer break level here as well. And as I've mentioned on the higher time frames, 4 hour and the daily, as well as the weekly, right? 1935, the 1930s is a big level here as well. So these are all, I can play these level to level if I'd like, but just to kind of err on the side of caution, I wouldn't be even considering shorts until 1959. I would think about changing my tone with well-defined weakness above 1980. But again, I am of the sentiment that, we're raising rates, we're doing all these different things. We need to see dollar weakness sometime here soon. We need to hear something from the Fed here sometime soon. And so I'm just going to continue to run with that until, they come out and say, hey, we're pausing or we're cutting rates, whatever the case is. I'm still expecting dollar weakness, although we are seeing a retracement on the dollar at the moment. Excuse me. So once again, pretty simple and straightforward. I'm looking to take buys from 2000. I'm trying to play this channel break into 2015 and higher than that. I would consider buys at 2000. I would consider buys on the break and retest of 2015. I would kind of sit on my hands at 1980 and see where price plays around. If we start to see a breakdown, or if we start to find stability, I'd much rather take buys on the reclaim of 2000 than wait for 1980 and catch a falling knife. 1959 is the sort of last resort for me. If we start to break down below 1959, I would consider shorts. I probably wouldn't take them just because, again, the overall narrative around the dollar and everything else, I'd probably focus more on GJ. But that's just me. And then as far as GJ is concerned, just to sum it up, we opened the week in this range between the June high and the December 22 high. If we're going to see continued upside, I would need to see definitive strength above the December 22 high, potentially a break and retest to have this ascending triangle play out into 170. Otherwise, I would wait for the reclaims of the June high and levels lower than that. It's only until I see a break below 168 with strength that I would consider shorts. And so that pretty much sums it for me, guys. Future me, God bless you, bro. I hope you're living your life to your utmost potential, doing your thing. I love you. God bless you. God bless everybody watching. And yeah, take care.